Holy smokes, everyone. So you think now is a good time to invest? Think again. Right now is one of the most dangerous times to invest in the stock market and Bitcoin. There are huge new risks mounting up in the markets that I'm going to be going over some new data and charts and proof to show you why this stock market and Bitcoin and cryptocurrency market is so overvalued and why it's so dangerous to invest right now. Okay, everyone, let's not waste any time. Let's get straight into it. So look at this, everyone. It's very dangerous to invest in stocks and Bitcoin right now. Longtime bear David Twice warns. So in this article, CNBC paints David as quite bearish in this article, but we're going to go over his warnings and we're going to fact check them to see if they are valid and if there are valid concerns and if it is really the most dangerous time to invest right now. So it says here, from S&P 500 to big tech to Bitcoin, David Twice warns it's a very dangerous period for investors right now. The market is very overpriced in terms of future earnings. And look at this chart, everyone. As we can see here, the S&P 500 PE ratios have never been higher right now. There was a technical glitch in 2008, which took it to over like 135, but that was just really a technical part of the quarterly earnings reporting. But we can see here we're now even past the dot-com bubble. So that first warning about earnings being very high is quite true. And his second warning is we're adding debt like we've never seen before. Well, again, let's check this warning to see if that's true. Look at this chart, everybody. Margin debt. The blue line is the S&P 500 and the red line is margin debt. And again, this has never been higher. So there's lots of speculation. And the thing with margin debt is once there's a sell-off, a lot of people get margin calls. So if we do see a 10 to 20% correction in the stock market, we're going to see a lot of people get margin calls, and then that makes the sell-off even worse. So he's also correct on this one as well. And also something that is warning here, which is kind of a new thing happening in the markets. We've seen Treasury market acting very strange with rates falling dramatically. And this is something new happening in the markets. We're seeing a lot of people flood into the US 10-year Treasuries. And while they be doing this, we've got, really high inflation. And, if the stock market is going to keep going higher and higher, well, people should be selling bonds and treasury yields should be going down. But the opposite is happening. We're seeing a flight to safety. So that tells me the banks and the big hedge fund investors do see a crisis just around the corner. So let's bring up a quick chart here. So as we can see, treasury yields peaked at around 1.75%. And as we're recording this, they've dropped all the way down to 1.245%. So that tells me there is a flight to safety. Investors are getting weary. He acknowledges it's tough to time the next major pullback and it's often early. However, Twice is convinced a market meltdown is unavoidable. And I completely agree. Many people warn early. They try to warn people early before it happens so people have time to prepare. But because, like myself, I warn early or other investors warn people early before it happens and it doesn't happen the next day, people go, oh, you're wrong. You're just fear-mongering. Well, again, people, it's better to be prepared 1 year early than 1 day too late. He warns we're not out of the woods yet and this is a dangerous market. He's encouraging investors to weigh the risks, trying to earn a 3 to 5% near-term gain while contending with the threat of a 40% pullback to what I think is a bet not worth taking. And I completely agree. We've got the stock market, the S&P 500, close to all-time highs right now, and there's not much catalyst for the market to be brought forward. Earnings are looking to peak around this quarter. We've had really good earnings, but I think Q3 and Q4 earnings are going to drop because a lot of people are going to have to start paying their rent again, start paying their mortgages again, unemployment benefits have ended, and there's no more stimulus checks coming out. So people are going to have a lot less cash to go and spend at these companies. So that means their price to earnings ratios will get even crazier and investors will have to price that in. I don't think there's going to be another 10% run up over the next 6 months. But what you have to do when you're an investor is a risk to reward scenario and you have to place your bets. What do you think is more likely? The stock market to go up 20% this year or a 20% correction? I think a 20% correction is much more likely, and that's where I'm placing my money and placing my bets. But just a few more indicators for you to take into account when looking at how overvalued the stock market is right now. We can see here the reason why the stock market has been booming because the blue line here is the Fed, the ECB, and the BOJ. This is their QE they've been doing in dollars. And as we can see here, as QE goes up, so does the S&P 500. But now it's starting to flatten out. It's starting to flatline and even decline a little bit. And if this QE does flatline, well, then that's not going to be a catalyst. You know, there's not going to be all those money printer memes going out there. Money printer go brrr! To force people to put their money in the markets. Also, another great indicator to use to see how overvalued the stock market is the stock market to GDP. And the US stock market right now is 234% of GDP, which according to the Warren Buffett indicator is strongly overvalued. Okay, so now let's look at what's going on in the crypto markets and with Bitcoin. His warnings there, and then he also gives us a solution and tells us where we should be placing our money or placing our bets right now. He says here, Bitcoin is very dangerous to hold today. He's also urging investors to be vigilant in the cryptocurrency space. Tice, who came into the year as a Bitcoin bull, turned bearish on Bitcoin when it hit an all-time high in March. And that's something I agree with, something I've been warning about. You know, I was pretty bullish on Bitcoin at the start of the year with the amount of money they were printing and with the amount of inflation that was coming. But what you have to know is investors price it in before it happens. So they already priced in all the inflation, all the money printing. And now with the technicals seeing how much Bitcoin has declined, it's quite obvious we're in a bear market. But you're still having many crypto YouTubers completely deny that we're in a bear market, even though the price has fallen 52% and we've been down here for around 2 to 3 months now. He also warns lately there's been a lot more uproar from central bankers. The Bank of International Settlements and the Bank of England have made profound negative statements, and I think it's very dangerous to hold today. So we can see here Bitcoin peaked at around 64,000 and it's just continued to grind down slower and slower. And I do think Bitcoin will hit the 24K mark, and then that's when I'll start dollar cost averaging back in. And also another big risk I think most investors aren't factoring in right now is a pandemic. And the pandemic around the world is getting much, much worse, especially with this new variant. And myself in Victoria, Australia, I'm in my 5th lockdown. Look at this, everyone. Global stocks tumble as Delta variant cases soar. Oil falls after OPEC reaches a new deal on supply. So as we can see here with the futures, the Dow's down around 1%, S&P's down around 0.8%, and the Nasdaq's down around 0.6%. We can also see gold's down around 1.3% and oil's down around 2.7%. So imagine what would happen if we just went back to square one with the pandemic, if we went back to the same amount of cases we had before, after we've spent all these trillions of dollars, after we've taken on all these $1 trillion of debt. We will just go back to square one, but we won't have the same amount of ammo to put out the fire this time. Okay, now what can we do to protect ourselves? Let's have a look. So this guy, what he's doing is devoted to metal and mining stocks. Twice a long-term gold and silver bull believes it's once in a decade opportunity for investors. You look at this lack of discipline in monetary and fiscal market, gold is truly the place to be, said Twice. Over 5,000 years, gold and silver do very well as a protection against fiat money. And with me looking at the latest Federal Reserve statements, it looks like the Federal Reserve isn't going to act to inflation. I actually think they may start printing more money because I think the US may actually possibly enter into a double dip recession next year if all the stimulus gets taken away and if the pandemic gets worse. So I think they're going to have to increase actually the money printing, and we could actually possibly see negative interest rates, and that would be bullish for gold. And if we look at the charts here, we can see gold is still down around 10% from its all-time highs. So it is at a bigger discount compared to stocks right now, and the same as well with silver. But like what we're seeing right now, if we do see a big market sell-off in stocks, like a 30 to 40% drop, I do think gold and silver may be caught into the sell-off like what happened in March 2020. But gold and silver isn't as overvalued like stocks. So I do think gold and silver is a better bet. But also what I am doing is I'm also stacking cash as well, because in a huge sell-off, like I said, everything will be affected. Gold will go down, silver will go down, stocks and cryptocurrencies. So I'll just pull up a chart here because as we can see, the dollar index has been increasing as well. So people are flooding to the US dollar to cash. And then that way, when everything does drop, you can go in there and buy up everything for a discount. So everyone, That's just some of the latest predictions on what exactly is going on in the stock market and the cryptocurrency market. You let me know your thoughts and how you're going to prepare down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. If you haven't already, please tap that like and subscribe button. I'll keep you all up to date in the latest housing market, stock market, and global finance news. And if you're bored, I'll put up some other videos here. I'll see you all there.